So what is the story with my lender in these bank statements? This is Jamie Millhiser, Fairway Mortgage again. Obviously, this bank statement thing, this asset piece of mortgage refinancing and mortgage purchasing that kind of escalated since October of 2010 in something we call the LQI, or Loan Quality Initiative. The bank statement thing's gotten a little bit clunky. And truth be told, we don't like it either. But it is what it is, and it's what's going to get you into that house or get you that rate you want. So we're all playing ball. Let's talk about the 5 major things that we need to address whenever we're talking about our clients' bank statements. The first one is you can't white or black out anything, okay, no matter how inconsequential it seems. No Sharpie, no pen, no person at the bank doing the little whiteout wheel thing and then faxing it to us. We see it, can't use it. Wall Street doesn't accept it. Second thing is we need all the pages. At the bottom of your bank statement it says 1 out of 4, 2 out of 4, and it's usually like, they're two-sided, and those pages are pretty generic. I mean, they're like ledgers for balancing your checkbook or, generic privacy policy for the bank that you work with. Unfortunately, once again, as nitpicky as it sounds, we need 1 out of 4, 2 out of 4, 3 out of 4, 4 out of 4 every single time. Now, this part gets a little testy too. We can't use these statements. Well, actually, when you're in your website, if you just print the statement, you get something without your name, without your institution's name, without your account number, or it's abbreviated. Those we can't use. But if your bank offers, which most do, something that says e-statement, where it prints out like the traditional old-fashioned one you'd get in the mail, those work great. Just make sure, once again, we get all the pages. Now, if you only have the ability to go down to your bank or credit union and have a teller or a bank representative print them off, then what we'll also need is each individual page stamped, certified. They'll have a stamper there, and then they have to put their autograph on there. They have to sign for us. Every single page. Once again, we're just playing the game for you. Now, the last thing, or the second to last thing that we have to discuss is non-payroll deposit. Now, this is kind of a slippery slope. Basically, we're supposed to verify every non-payroll deposit. Now, you sell your kid's bike for $35 at a garage sale and somebody gives you a check. You decide to get rid of the telescope you bought 4 years ago and somebody gives you a check for that. I know, it's real detail-oriented and it's real nitpicky stuff, and you really don't feel like talking about it with us, but we have to get it. The last thing that happens is non-ACH payroll. Now, this comes up very few and far between now, but if you happen to work for somebody that isn't doing ACH, and every other Friday, the old-fashioned way, you drop off at their office and they give you your paycheck, we're going to have to do a little bit extra discovery on that piece too and get some extra paperwork. So we're going to try to make it as pleasant as possible, try not to take it personal. We know it can be a pain in the neck. But look on the bright side, you've gotten to meet Shannon, and at least it's job security for her. Until next time, Jamie Millhiser, Fairway Mortgage. Thanks for watching the video. Hey, follow me on Twitter.